Hello everyone. Today I want to talk about how can you report to IRS when you did a backdoor Roth IRA conversion. How can you report this event to the IRS? So basically, IRS require you to fill out the form is 8606 when you do the tax return. So let's consider a situation. Let's just say in 2018, beginning of the 2018, then you heard a lot of good things about Roth IRA. Then you really want to get some money in the Roth IRA. But you actually, in your situation, is you make too much money and you are not eligible to make a direct contribution into the Roth. So that's why you have to go through the traditional IRA. When you make a contribution to the traditional IRA, this is after tax contribution. Because you make too much money, you are not eligible for before tax contribution. So you make a after-tax contribution, which is called non-deductible contribution to the traditional IRA. So when you make a non-deductible contribution to the traditional IRA, you are required to fill out this 8606 form, and because it's the beginning of 2018. When you make a contribution before April 15th, 2018, you can ask your custodian to code this contribution as 2017 or 2018. Just because the deadline for contribution to the traditional IRA is April 15 the next year. So let's consider you want to get more money in the Roth. You want to make a contribution in the beginning of the 2018. You consider this is 2017 contribution. Then you convert this portion to Roth IRA right way. Then later of the year, during the 2018, let's say in the August, you make another contribution in the traditional IRA. Then you convert this amount to Roth IRA immediately. So when this is you did a two contribution and a two conversion in this situation, how you report this event to the to IRS. That's you have to complete the 28606 form. When you file tax return in 2018, you have to report the 8606 form of the 2017. Let's say it's 5500 non-deductible traditional IRA. This is in 2018 when you file the tax return. In 2019, you file 2018 tax return. You have to report this 8606 form again. Then in 2018, this form is a little complicated because you within the 2018 you made another contribution to your traditional IRA. Then you convert to Roth. So on 2018 8606 form, you have to report like three events. So one non-deductible contribution and the two Roth conversion. Just want to a little tip here is Roth conversion is a little different from contribution. Roth conversion you have to convert within the calendar year. So when you did the Roth conversion for 2017, because you did in 2018, that would consider in event occurred in 2018. So this both Roth conversion is considered in 2018. You have to report on 2018 8606 form. So report this form to IRS. It's very important because if you don't do it, you may get fined by IRS. So it's very important you report that. I'm going to walk you through how to fill out the form for 2017 and 2018. This is the 8606 form for 2017. So for the personal information on the top, you can see just, you can put your name, social security number. If you file with your tax return, you don't have to put those type of information here. Let's jump into the part 1. Let's say in 2017, only one event happened, which is we made a non-deductible contribution in the traditional IRA. So we only need to report this event. So in part 1, they basically say non-deductible contribution to traditional IRAs, distribution from traditional IRAs, SEP simple IRAs. Complete this part only if one of the following apply. First one is you made a non-deductible contribution to the traditional IRA for 2017. Yes, we did this one. The second one say you took distribution. No, we did not take any distribution. We did not take any money out from those accounts. So the third one is say you made a conversion in 2017. No, we did not convert the Roth in 2017. We did that in 18. So we only did one thing. Let's see 9.1. Enter your non-deductible contribution to the traditional IRA for 2017, including this made for 2017 from January 1st, 2018 through April 17, 2018. See the instruction. Yes, we made a 2017 contribution in January 2018. So this applies. This you put a 5,500 here. Then the second one is enter your total base in traditional IRA. So the base basically say because you did not have any traditional IRA before, if you don't have any SEP simple IRA, so your base basically is 0. So you didn't have any non-deductible contribution in your IRA account, so this base will be 0. Then number 3 say add line 1 to 2. So 5,500 add 0 equal to 5,500. Then here they say in 2017, did you take a distribution from traditional SEP or simple IRAs or make a Roth conversion? No, we did not do any of this in 2017. So when you choose no, this will say enter the number amount from the line 3 on the line 14. This line 3 is 5,500. Then they also tell you do not complete the rest of the part 1. So then we are done. We are done with part 1. So we just put the line 3 5,500 on the line 14. So we are done. Then what is line 14? They say this is your total base in the traditional IRA for 2017 and earlier years. So basically this is a base. When you didn't complete any 8606 form before, usually this base is 0. So now we have a base here. when you completed this 8606 form in 2018, you have to add this base to 2018 form. Okay, let's see the rest of the form. This is page 2. Page 2 have a part 2. Part 2 is 2017 conversions from traditional SEP simple IRA to Roth. No, we did not make any conversion in 2017. So we do not do anything here. Then part 3 is distribution from Roth IRA. No, we did not take any money out of Roth. So we are done. We are done with this form. Yeah, that's it for 2017 form. It's very simple, easy. You only 1, 2, 3, then 14. Then we're gonna go next year, which is 2018. 2018 will be a little complicated. If you remember, what happened in 2018? We made another traditional IRA contribution, which is a non-deductible contribution in traditional IRA. We did a 2 Roth conversion. So that's make it a little complicated. Let's start with part 1. So we did make a non-deductible conversion to traditional IRA in 2018. We did not take distribution, so this does not apply. Then you convert part your traditional to Roth in 2018. Yes, we did. So we did it in 2018. So let's go through this. The first one, enter your non-deductible contribution to traditional IRA for 2018. Yes, we did it within 2018. Yes, we made another 5,500 contribution. This is 5,500. Enter your total base in the traditional IRA. So if you remember that on the 914, that say that's your base. So that was 5,500. So that's the base here. Then add the line 1 and the 2. So this is added together is $11,000. Then here say, did you do a Roth conversion? Yes, we did. So now we have to go 9.4 say enter those contribution included in 9.1 that were made from January 1, 2019. So basically we made the contribution for 2018. We made within the year. Actually, we didn't made in 2019. So this amount would be 0. Then they say subtract 9.4 from 9.3. Then $11,000 minus 0. Then it's $11,000 here. Number 6 say enter the value all of your traditional SEP and simple IRA as December 31, 2018. So if you don't have any other SEP simple IRA, the reason they ask here, that was called pro rata rule. If you guys are doing Backdoor Roth, you should know that. Maybe I do another video talk about this. So anyway, so that's why they're asking here. But we consider you don't have any simple SEP IRA, so you only have traditional. Then you can think, let's pause a little bit, then think, okay, in 2018, we didn't make a 2 contribution in the traditional IRA, but we convert both of them to Roth. Then we should tell you by the end of the December 31st in 2018, the value of these the end of the year, then we should have 0 in it because we convert everything to the Roth. So here should be 0. Then 7, say enter your distribution from traditional IRA, SEP, simple IRA in 2018. So we do not take any distribution, so this should be 0. Then 8, say enter the net amount you convert from traditional SEP, simple IRA to Roth. Yes, how much we convert? We convert the both of the contribution, which is $11,000. So this is $11,000. Now they ask you to add the 9,678. 0 plus 0 plus $11,000 is $11,000. Okay, number 10, they tell you divide 95 $11,000 by 9 $11,000. They ask you to divide $11,000 by $11,000. This is 1. So basically this is 1. They ask you to 1.000. So number 11, they say multiply the 9.8. Multiply 9.8. Okay, $11,000 by 10, 1. Multiply 11,000 by 1. So that's $11,000. They also ask you to enter this amount on the line 17. Line 17 is the next page. Also, actually here, they also ask you to enter this amount to the 916 is the next page. Later you will see that. So they say multiply 97 by 910. 7. Okay, 7 is 0. Then 10 is 0. You multiply 0, 0, 7. This is 0. Multiply 1. It's 0. Okay, then add the 9, 11, and the 12. This is the non-taxable portion of all your distribution. So basically, if you add the 9, 11 and the 12, $11,000 and the 0, this is your non-taxable portion of your all distribution. So it's inserting here all your distribution. Okay, so that's here. Then subtract the line 13 from the 3, 913 from 3. So $11,000 subtract $11,000 is equal to 0. So now you can see the 14. Number 14 will tell you this is your base gonna be 0. So basically the base is your non-deductible contribution. So if you have no money, is after tax money in your traditional IRA, your base should be 0. So now here is 0. Then 15A subtract 9, 12 from 7. Okay, 12. Let's say 12 is 0 from 7 is 0. Then 15B, enter among the line, subtract qualified disaster, that is 0. Then taxable amount, subtract the 9. 15A minus 15B is 15C, so this is 0. This is a taxable amount. So because this you made a after tax contribution to the traditional IRA, then you convert this amount to Roth. There's no tax you need to pay because the tax you already paid on the money. So that's why taxable amount is 0. Let's go to the second page. Part 2 is the 2018 conversion from the traditional SEP simple IRS to Roth IRA. So if you remember earlier, we moved the number to here 916 and the 17. This is the same. The 18 basically asks you to subtract 917 from the 16, then you get 0. So this is your taxable amount. You do not pay tax on this because I already said it's after tax money. So you don't need to pay tax on it. So that's it for 2018 form. That's how you filled it out. Okay, hope this will help you.